Congratulations. So you've picked up the enterprise SaaS fundraising model and you've looked at it and thinking, oh my God, now I need to actually fill this thing in and get the whole thing done. And it looks a little bit overwhelming. Don't worry, it is. It's 10 megabytes of total and utter badass. And it took me months and months to build. So why don't I do these things? I'm going to take you through the history of how I build it so you get a little bit of context of how the model works. And I'm going to take you through all the parts of the model so you know how to actually fill the thing in, right? We're going to go through each of these parts in a series of videos, and hopefully by the end of it, you won't have lots of gaping questions about how the frick this thing actually works, and you can actually get it done. Now, it is going to take you some time. It is not easy, but it'll be a worthwhile exercise. What most people actually say to me is, you know what, it was a lot of work, but it forced me to ask questions that I wouldn't have thought to ask of myself. So this really is a vigorous exercise for you to really and truly understand your business and how you're going to be successful, how you're going to make it work, and then to be able to communicate that to investors. Now, it's so important to understand that you're not building a business for VCs. Yeah, sure, you want to get funded now, but come on, let's be honest. You need to actually build a real business if you're going to be successful. And then that requires you understanding everything about how your business model works. You know, all the aspects of your marketing, your sales strategy, your conversion rates, and even your churn. And we're going to go through all this now. Now, the model is large. I'm going to break it up into chunks and videos. You can skip to where you want. So enough talking. I know you want to get right in the action. So I'm just going to do this now. Are you ready? You better be, because we're doing it. Okay, I'm going to give a quick history about this model and how it was built so you can kind of actually understand it. I was raising 20 million for an AI company, and they had super long sales cycles. We were selling to big banks, insurance companies, and I mean real tickets, millions of dollars for a license. Now, to pull that stuff off takes a very long time. And it's not just, the whole sales thing again, the deal done. Like that's one part of it. But you have to go through all the POCs, the implementation of the product, get the approval. And, that was taking 12, 13, 14 months, right? It wasn't short. And so I had to figure out, how the hell am I going to actually forecast revenue that is totally unpredictable? So I spent ages. And I mean, I was working, doing this job and building this model at the same time. And I was putting in insane amounts of time to build this thing. And what I fundamentally approached doing was thinking, okay, how do I break this down? If you're pitching clients, there's going to be a period of time for there. There'll be a period for POCs. There'll be a period for the development customization. There'll be periods for warranties and all sorts of things. Along those times, they're going to generate revenue, right? Assuming you do these deals. But more than that, you would hope or expect that those clients aren't just going to hit it and quit it. You're going to do one deal with them, and then maybe you're going to expand to multiple countries or provide them multiple products. And then there maybe will be an additional phase of selling their products, which is why I have an initial and 2 expansion phases for these clients. After that fundraising process, I was like, do you know what? There literally isn't one model on the internet which can actually help founders do this. Nothing. I swear to freaking God, I would not have built this model if someone else had done it already. It really was so painful making this thing. And so I cleaned it up and I shared it with you. So you didn't have to go through the same crap that I did. And let's face it, this model is worth tens and tens of thousands of dollars, and you're getting it for a song. Hey, you may think that the couple $100 you spend is expensive, but you try spending months making something like this if you're even capable of doing it. Maybe you are. That's cool. But you're here, so tough. Now, the next part. So we have this enterprise thing, and then I built a template before for SaaS founders because, let's face it, there's a lot of them around. And so the SaaS model basically thinks about business as being easier, right? You do some marketing, you get some leads, they convert, they pay you money, they churn, and hopefully they keep paying you money. Then you have, everything else, whatever, some sales supported stuff. You have your G&A, your ops, and whatever, your general expenses, and it feeds through P&L, and blah, blah, blah. So your SME stuff is distinct to the enterprise part, right? So you're going to have people who will automate on board really easily, like whatever buffer you sign up, $10 a month, easy, nice. You don't need to have that sales supported. And then you'll have the more expensive parts, which will be the SME, it's SME sales supported part, which is where, you're going to have guys getting on the phone or maybe doing some customer success because it's a bigger ticket and trying to close those deals. But I differentiate kind of between these little buckets. And so I took the SME model that I had made and I added in the functionality from the enterprise part. So it's kind of an addition to it. So you'll see that in the P&Ls and various KPI sections, there is some commingling. Fundamentally, you should really think about it as being two business model operations. I am going to try and make like a pure enterprise model without the old SME SaaS part in it. It's just quite a lot of work to break it up. But right now, if you are just doing the enterprise part, you're not doing the SME part, you can set your details to 0, or if you have bought the blank version of the file, it's already blanked out already, so who cares? Just fill in the enterprise part, and you can save the SME SaaS bit if you kind of go downstream, and off you go. But there you go. So the model was basically built in 2 parts. One for pure, hardcore, big, long sales cycle business when you're really not sure what you're doing, and for SME, like automated, much more easy kind of business in sort of different ways, okay? All fills together, but it basically encompasses the whole gamut of a SaaS company or any kind of SaaS company that you'd want. So hopefully it really adds value to you. It covers a lot. I know it kind of can appear to be a lot, but it's sure as shit better than trying to have to figure out yourself. And I know because I had to build these because I had to solve my own problem. So cover page, what you should do basically is delete it or change the logo, write your name in, and ship it out. I'm pretty sure you can figure that bit out. Now the intro page here, it's just some wiffle waffle about explaining what's in here, what all the sheets are. Have a run through, understand the assumptions that I make about what each cell means. Everything is extraordinarily well structured and presented, so you should be able to understand it. So if you see something that is yellow and blue, it's an input. Feel free to play around with it. If you see something that's black, it means it's a formula, and don't touch that unless you know why you're actually doing it. If it's green, it's links to another sheet. And then variously otherwise, you can pretty much figure this stuff out, it says. But the most important thing is if it's yellow, basically play around with it. If it's black or green, don't touch. It's a structural thing. Now, feel free to change the model if you like. That's totally up to you. The model is open. It's not restricted. You can do whatever you want with it other than give it away for free, please. If you are struggling with it, don't forget I offer a quick free chat with everyone to answer the quick questions, but hopefully these videos will help you get through it yourself. And if you want to change it, customize it, and that just seems like way too much effort, feel free to reach out to me. I do offer services to a lot of founders to actually make these templates work for them. Okay, so have a quick read through this. I recommend that quickly. Some of it's proper waffle, just to be like FYI, but there's a couple of notes there you want to know about. Now, we're going to go through in this video the formatting sheet, the P&L actual, the forecast combined, and the D&A and depreciation, amortization, and tax numbers. And in the next videos, we'll work through the different sheets. So let's start out with the P&L actuals, okay? This is a summary of your numbers that you actually have, the numbers that you actually know that you have, your actuals, okay? Everything is grouped up, by the way. So if you see there's these little plus signs, it means it's not grouped up. So you can see, it gets bigger and smaller if you ungroup or group things. And if you say, I want to focus just on this little aspect, you can ungroup something, or you can ungroup everything. Now you can see here, we've got numbers for January, February, and March. Now, if we look at the forecast sheet, same thing, you can ungroup everything. You can see that the date starts at April, right? January, February, March, April. There's a real reason for this, okay? You are, during your process of fundraising or just operating, are going to have new numbers as you go on. Your fundraising is not going to take 1 week unless you're awesome and it's super easy. So God bless you if it is, but for normal people, it's not. It can take you maybe 3 to 6 months easy. So how much of a pain in the ass would it be to have to keep on structurally changing your model every single month? So I literally spent days trying to figure out how to do this, complaining to my friends. Like, it looks simple now, or hopefully it does, but it was really hard to try and make this so really simple for you. And so if we look at the combined sheet here, we can see that the dates started January, February, March, April. Now, these are coming from the actual sheet, and then this will come from the forecast sheet, but you can dynamically change it just by changing the date. Okay, I'm talking cross purposes here because I want to then explain the formatting sheet for you here. Now, let's say your actual start in January 2017. I made this model last year, so this is why it's in the 17s. And your forecast is April, so you're going to have January, February, March as your first 3 months of actuals. Remember, January, February, March. And then your forecast is going to be starting in April. But what happens if April passes, you're still doing it, or you're still operating? Nice. You just want to update it. So what you would do is just type in your actuals here into April, and then you change the forecast date to be May. Boom. Now, if we look at the combined sheet, you'll see that there are blanks because you haven't actually inputted the actuals. Do you see what I mean? So the combined sheet pulls it all together. So we'll just undo this now. And back to April, okay? So if you, for example, are a new company and you don't have any actuals, you're thinking, oh, how do I make this work? That's really easy. You just set the date to the same date. So it'd be Jan 2017 for forecast and actuals. Simple. Now, you might have just noticed that it takes a little bit of time for things to update. That's because it's a 10 megabyte model of badassness. It does actually take time for things to process. So be a little bit gentle. Don't freak out. There's a reason for all of this. What is also really important is to understand that if things aren't working for some reason, you need to go to your formulas. I just typed in Alt-TO, by the way, for a shortcut. Go to formulas, make sure your workbook calculations are set to automatic and that iterative calculations are turned on. It will not work if this button is not pressed. Now, let's say you're a bit au fait with Excel and you just want to start whacking in all your numbers just to go boom, and you don't want to have to wait the time for the micro processing. You can actually put it to manual, input all those things, and then remember to put automatic. So when it's on manual, the calculations are not processed through Excel, so it'll just be way faster. But otherwise, put on automatic, enable iterative calculations, and everything will work, okay? Remember, the shortcut is Alt-TO if you are on a PC. Otherwise, on Mac, just go to Settings, Preferences, and do the same thing. Okay, so you can set in the forecast date and your actual date. What is your year end, okay? So 12 would be December, right? It's a drop-down menu here, December, type 12. This is used for a couple of reasons, basically for your bonuses, your tax, and things which happen for year-end accounting, okay? And so for bonuses, you technically will accrue bonuses every single month, which you have to pay out because it's a liability, okay? But it's not actually coming out on cash. Now, in the model, I base most of it off your traditional sort of GAAP IFRS model, but I also make adjustments at the end for operating cash, which is what you sort of actually only really care about because it's when the cash actually comes in and it comes out. And so you pay your tax on a year-end basis, or you pay your bonuses on a year-end basis. If you do it differently, tough, you're going to have to change the model, but this is how I've done it. But you can set when that actually happens, what month that will be from January to December. But by default, it's set at the 12th month. Now, the whole model is in dollars. You can pretend it's a different kind of dollar if you are in a particular kind of country, but it is in basically US dollars. Why? It's sort of the language of finance, and frankly, it's a bitch to change for different currencies. There is no little button you can press and have all the formats magically change. I did pay this like geoscientist in Russia to start making a macro for me for the smaller SaaS model. But seriously, it just got so complicated and it was context specific. And so if I ever update the model, I'd have to, figure something else out or, like re-update the macro, and it's just too complicated. So if you're in pound or you're euros, tough shit, okay? All you can do is just change this to something. Whoopsies, what did I do? You can input a pound sign, you can input whatever, and at the top of each page, it'll say in dollars something, right? Or in dollar USD. So we'll have the dollar bit here, the USD, and you just tell people, please just read the header and understand it's in pounds, not dollars, although all the numbers are actually written in dollars. Otherwise, it's frankly tough, and just get over it. It's really not that much of a big deal. Investors aren't that stupid. This thing here, you'll notice some formulas will have a times by unit, which is a defined name here. This basically just converts things, from like millions to hundreds of thousands, etc. So it makes the numbers smaller. Okay. Just leave it as it is unless you really need to change it for some reason. Most of the settings are as it should be. Now, the final, really simple. If you pay tax, who likes paying tax? But hey, right? You just type in how much income tax is here, and it fills in through the model, and it makes you less profitable and you got to pay shit to the government. Yay, great, right? So I'm going to take you through the P&L actual now very quickly. This can be a little bit complicated to understand. The most important thing to understand is you have to fill everything in properly. Everything, okay? If something's not there and you're like, oh my God, this model shit doesn't work. No, it's because you didn't fill it in properly. You have to put all the numbers in. So we start out with SME customers end of month, which is basically just a summary, okay? So it's gonna add them up. So you're gonna type in the customers that you start with, and this will just feed through. And then you're gonna put in what your monthly customers are at the end of the month here for your SME and for your annual. Actually, this is a great time to explain something. The model basically deals with two buckets and three categories of customer. We're going to have your enterprise customers where you're laboriously going to have to do field sales and like maybe have a 13-month sales cycle or something, right? You're not really doing marketing there. It's just knocking on doors, dealing with relationships and getting things done. Then the second bucket we have are your SME customers, right? These are basically everyone else. So I use SME through the model. And the breakdown of these SME people are going to be your customers who are either sales supported in the process or automatically onboarded. And it's a lot more light touch than it will be for your full-on enterprise cycle. So the SME segment as defined is different to the enterprise part, and there's basically zero interaction between them. So if you don't have to deal with the SME part, you can effectively set the details to zero and forget about them, or maybe add them in future if you want to. Okay, but there's a differentiation between the logic. They all feed through with KPIs and go into the P&Ls, etc. But the logic is basically different here. So when you see the SME thing, you can assume it's different. So you're going to have monthly customers, you're going to have annual customers, so type in what they are. That's basically the difference between, revenue, bookings, and billings, right? And then, sorry, my mic's in my way. You're going to put in, if you have enterprise customers already, say here we start with 1. I'll deal with the initial and the expansion stuff later on. Then you're going to have your SME bookings and billings, again, different to your enterprise. But so for the purpose here, I treat bookings and billings effectively the same thing, okay? If you have professional services, where are we? Professional services are linked somewhere else, whatever. So enterprise bookings. If you've actually booked revenue, you pop it in here. I have a little formula here, which is calculating up on this basis. But if your formula is different, feel free to change. And then we have, okay, this is your enterprise part. So if you have sold to customers before, right? You got one customer here. You are getting license revenue, setup, maintenance, training, POC revenue, whatever, from various different streams. Setup customization, your training and maintenance, your POC is typically one-off revenue. So this doesn't repeat, right? They're paying you once. Thank you very much. Don't come again. With your license revenue, this is actually going to repeat and it's going to filter throughout the rest of the model. So you're not going to be churning out effectively and you're just going to keep on making more money. It'll be in the enterprise section. I'll show you it again, but just so you understand, this is where you put your enterprise billings. Now, back to the SME part here. All right, you have MRR coming from SME because it's nice monthly recurring revenue, ideally. You're going to roll up the annual stuff into it. If you have professional services, you whack it in here. Enterprise revenue from your enterprise revenue is going to be put in here. Your revenue is different to your bookings or billings. Hopefully you understand the difference. Okay, so you put in what the actual revenue is. So you can see that the enterprise revenue that you're taking in is going to be smaller than your billings. Well, Google if you don't know. Right, moving on along down. For your SME stuff, maybe you have discounts and vouchers, marketing schemes, I don't know, up to you, right? But what is the amount of that? This will tell you what percentage it is. It kind of shows nothing because the number is too small. If you have cancellations for some reason, whack them in there. COGS, yay, we got staff, payment costs, server costs, email costs. Put in those costs in negative. Note the notes will tell you to put things in negative to make sure that you do it right because that can be tricksies, right? Marketing is put in here. Marketing drives your SME, doesn't really affect your enterprise stuff at all. So whack in how much marketing you're doing. If you have bad debt and credit card fraud, whatever amount it is, you can whack that in there. These percentages look a little bit too high, but anyway, you get the idea. Then G&A, R&D, S&M, your other buckets, whack in all your aggregate costs into here. Depreciation comes to depreciation sheet, which we will deal with in a second. Then you end up the net income. Yay! Now I told you we had your P&L at the top and then your operating cash flow below. What this basically does is makes a series of additions and deductions to get to your actual operating cash flow percentage or amount. It's all spelled out really clear. So less, remove, blah, blah, blah. There's a couple assumptions you're going to whack in. If you have CapEx for actuals already, you're going to want to put in what CapEx you spent here. What is this for? Monthly bonuses. If you have accrued bonuses for that, which need to be paid, then you're going to be whacking in your bonuses because that's treated separately to your general staff costs. And where are we? Less annual bonuses. Okay, cool. And then the rest of these are just linked up. You can follow the model if you like. I'm not going to go through everything. Otherwise, this video will end up being 20 hours, which may be good or bad, but I have a life. Cash. How much cash do you have in the bank starting out the first month that you have? Whatever, 400,000 or something. Here, this is in thousands. If you fundraise, you put in the number. Type it in. Whatever. Yeah, I've just raised $1 million. Boom. You've got 1.3 in the bank instead of 300K. Thank you very much. All right. So that is a quick intro into your actual sheet. We have notes at every top to explain what is going on. Forecast. There's basically nothing in this thing because it just sucks in everything from all the other sheets. There's only a couple assumptions. So you can read the guide. It'll tell you how you need to fill it in, but I'll explain to you because that's what I'm doing right now. Where are we? So it's a little bit slow because I'm running parallel computers. So similarly, if you have discounts, vouchers, put in what the percentage is of that for the SME, not the enterprise. Cancellation rates. Sorry, it's slow. Bad debt credit card rates. And then, yay, if you get money. So here we've raised $2 million. And I think somewhere here, yay, $6 million, okay? There you go. That's all you need to do to fill in the forecast sheet. It sucks in everything from all the sheets. So you can see like things look like they're green because they're links. The black stuff is formulas. And that is the forecast sheet. Combined, you literally don't need to do anything. This is just adding stuff up between the two different sheets. If I can find a little formula here, I can show you the crazy ass formula I figured out to make this all work. This will probably be somewhere down below. Here we go. So you see it's if forecast start date. So it's putting into the formatting sheet and figuring out what the dates are. It'll take things out of the forecast sheet or it takes it from the actual. I did all the nerdy stuff for you, but basically there is nothing to do on this sheet, but just look at it. But you can see January, February, March, April. So the first 3 months are pulling from the actual and then it pulls from the forecast. But it's all in one nice little sheet. Now, final sheet for this video. Thank God. Hopefully you're still awake and with me, right? You basically don't need to do anything in this sheet if you don't want to. If you understand all this nerdy stuff like depreciation and stuff, like, yay, great. I have built-in investment banking standard stuff here, and you can fiddle with it, okay? If you don't understand this stuff, I'm not going to teach you. I'm not a lawyer or advisor, and frankly, you're not paying me enough anyway. So you have to understand how to do this, but you can put in what the life is going to be of your assets. I put it on as 5. Maybe you know what your different tax standard is. How is the declining going to be? MACR basis, whatever. For your new CapEx, how many years is the useful life of it? Whatever in Ireland, I think it's like maybe 8 years. What the declining rate is, I said, you know, like MACR or whatever, a straight line. You can pick which basis you want to do it on. And what is the tax basis of your CapEx? If you know it, if you don't, just ignore it, leave it. Just like life's short, get rid of the sheet. You can put in your starting CapEx if you got something on your books already, which is, you know, your effective, where it says ending net at CapEx, but it's basically the starting point. Read the note. And is there something else? Oh yeah, you can do this for net operating losses. So your NOLs stand for net operating losses. If you have them, yeah, great. You can put in the numbers there and that shizzle will do it for you. You know, this is pretty nerdy stuff. It's kind of what you do in banking. You either do or don't know how it works. So I'm not going to lecture on you. If you want to do this stuff, feel free. If you don't, cool, whatever. Okay, so that is a quick overview of the first few sheets. These are effectively outputs, except for, you know, the DNA tax sheet, which is doing some heavy lifting calculations, which you don't have to deal with if you don't want to. But these are outputs. Now, when you're going through this model, this is one of the sheets that you're going to want to go and have a reference to make sure that things are kind of making sense. You know, the KPI sheets can be sort of more instructful to make sure you're on the right train. But I definitely will be checking these sheets regularly as I update the model to make sure that I'm, you know, getting to where I want to be. So there you go. Combined, basically nothing in here. It's just an output. Forecast sucks it in, maybe 3 assumptions. Actuals, you're going to have to actually have your KPIs or all your numbers to hand to be able to fill this in. If you do have them to hand, it's fairly easy to do it. You may find a little bit complex making sure of, you know, how the things filled in. I tried my best to make it as easy and automated as possible, but it's too hard to make it too simple. I mean, I've tried my best for you, okay? Formatting thing, basically all you need to do is type in your tax rate and, you know, your forecast date, your start date, and that's really simple. And hopefully that was useful, okay? So again, read the stuff and you'll get away. But hopefully this video will have answered basically all your questions that you'll have as to how the frick this thing actually really works, the first part. Now, hang in, or do you know what? Maybe you want to fill in the actual sheet and just kind of see that it works. But we're going to be going through, I guess, some easy ones, right? Some outputs. So we'll be dealing with the KPI, the P&L, source and uses, and the charts. There's nothing basic in doing them, but they're useful outputs for you to understand what the frick is going on with this model. Cool. So the next one is going to be hopefully a little bit less onerous on you. But get on and fill in the P&L actual sheet just to get started out. You must have the numbers to hand. Just put them in. Okay?